This is a full trading beginner course. There's no edits. I'm going to go full raw, teach you on how to go from beginner to advanced trader. All right, before we get into the live markets, I'm going to go quickly over some basics candlesticks. You can already see the parts labeled on the screen, the high, the wick, the body, the open and the close, all that. But here's what I actually want you to understand. When you see a green candle, that means it's bullish. It means buyers were strong and they pushed price back up. If you see a red candle, that means it's bearish. It means sellers were strong. They pushed the price down. Now, if you look at these wicks, the high and the low, the high, these are called shadows or wicks. Usually people call them wicks. That shows how far price moved, but it didn't stay there. So if there's a long wick at the top, that means price went up there, but got pushed back down. Probably sellers stepped in. Same for the bottom wick. If it's long, price dropped low, but buyers pushed it back up. So that means this is where it opened, this is where it closed, that's the highest point it reached, this is the lowest point it reached. Same thing for the bearish candle. Open, close, lowest point it reached, highest point it reached. Now let's go into the live markets. This will be the most important platform you will be using, which is TradingView. What you want to do first is just sign up real quick. All right, once you have made an account, just go to products and go to super charts. Here you will do all your analysis. When you first open it up, it might look a bit overwhelming, but don't worry, I'll walk you through it step by step. Now, first of all, on TradingView, you can basically analyze everything from indices, crypto, stocks, Forex, everything. But I trade Forex, so I'm going to focus on that. Now, what you want to do is just go over here, go to Forex and add the pair Euro USD. That means that's the euro versus the US dollar. It means we're comparing the strength of the euro against the dollar. If this chart is going up, it means the euro is getting stronger and the USD is getting weaker. Now, once you've added the pair, just click on it and this is the Euro USD charts. Now, let's talk about time frames. Press on over here and you got all the time frames, 1 minute, hours, dailies, weeklies, monthlies, everything. But if you're going to be a day trader, you'll mostly be on the 5-minute, the 15-minute and the 30-minute time frame. But if you're going to be a swing trader, you should probably look at the 4-hour, the 1-hour or the daily time frame. Right now, I'm just going to go on the 30-minute time frame. The time frames mean that each candle shows what price did during that time frame. So if I'm on the 30-minute chart, that means that each candle shows price movement for 30 minutes. I'll zoom out a bit so I can see the bigger picture. Before I do any markups, I like to get a quick feel for the market if the market trending up or trending down. If the market is in an uptrend, it means price is mostly going up, obviously. And if the price is in a downtrend, it means it's going down. Now, is this market in a uptrend or a downtrend? It is in an uptrend. Why? Because it's making higher highs. It's taking out highs every single time. As you can see, this is an uptrend and this is a downtrend, and it's definitely not making that right now. And we also got a consolidation area, as you can see right over here. This is what basically consolidation means. You got no clear direction of the trend, so you can't really tell if you're going on an uptrend or a downtrend. So what consolidation means is just you're not taking out highs, you're not taking out lows, you're just moving like this. As you can see, we're in a downtrend, a very small downtrend, then we start taking out highs, but then we're consolidation, no clear direction. But then once we started going really high up, as you can see over here, we can already tell that we're in a clear uptrend. All right, so let me show you some of the main tools I use on TradingView. First is the trend line tool. As you can see, you can just mark up the highs if you're in an uptrend and the lows if you are a downtrend. You can also customize it whatever way you want. So this you can actually find if you press over here and go to the path one and just favor it. Now also you have the long position. If you're taking buys, these are the most used ones. And if you're taking a buy, so you can see your risk and your target. And also if you're taking a short, then you have the sell position too. These you can just find if you press over here and you have the long position and the short position. You can just favor both of these. And yeah, speaking of customizing, you're probably thinking these charts look absolutely ugly. That's why I recommend going to the chartlayouts.com. You can grab a clean layout someone already made and just copy the settings. Looks better in seconds. Or you can just do it manually. Just right click on your screen, go to settings, and you can just mess about with these settings. All right, so once your chart's all set up, I just want to go over some tools. But before I do that, you want to change your time zone on TradingView so the tools would work properly. So you just want to go to the bottom right corner over here and set the time zone to your local time. Okay, so the first tool I want to introduce is Forex Factory. This will be very important and you'll be using it every single day if you're not going to be gambling or anything like that. Now let me just quickly set up some settings. Now you want to click on this green button here. This will filter all things. Now what you want to do is unclick the yellow folders and then the gray folders. The red folders is the ones you'll mostly look at, and the orange folders are like, they don't have such big effect on the market, but you can still use them. But now, if you're only trading a pair like Euro USD, you would want to unclick all the other currencies that aren't USD or Euro. So just keep on Euro and USD. Now, as you can see on this example, I'll show you exactly on why it's useful. So as you can see, there's news at 3:30 p.m. and there's USD news. There's unemployment rates, employment change, and average hourly earnings. Now, this is very high impact news. So as you can see, if I go on my charts, that was the 4th of October, 2024 at 3:30. Now, as you can see, this is what kind of impact news will have on your charts. Now, let's say you will want to take a long position over here. Now, you definitely have to avoid this kind of thing because news are definitely unpredictable and you'll never want to trade news unless you're trying to gamble or something. So that's why it's very useful. Now, for the next tool, I want to talk about backtesting. This is super important. Backtesting basically means going back in time and testing your strategy on all price data. Now, you have to do this. You can't just go on YouTube, find a random strategy and start trading it live. You need to test it for yourself. Some strategies might work well for you and some might not even fit your style at all. Now, for backtesting, the best free tool I found is Traders Casa. There are other free tools like FX Replay, Go Charting, and so on. But if you're willing to invest a little more money into trading, I definitely recommend getting the TradingView Premium. There are so many features, including the replay mode. But for now, I'm just going to stick with the Trader Casa because it's beginner friendly and gets the job done. Now, once you're on the website, sign up. After that, this is what it will look like. You got everything you need if you're just trying to test a strategy. Now, on the left side, click on backtest over here and create a session. I already made one here, but if you made yours, then go here and press the play button. Now, once you're on the charts, you would want to set your time frame. So I'm going to set on the 30-minute and then I'll set the 30-minute right here too. Now, it's pretty simple over here. What you want to do, let it play out. I'm going to put it speed like 5x. And then once you see your strategy, if you have a strategy, let's say, I don't know, fair value gaps, whatever. Now, let's say you want to take a buy right over here. You go to the left top corner and press on open position. Now, over here, you want to set your price where it is right now, your stop loss, your take profit, and your risk percentage. So the price you set right now is this price over here, which shows on green. For a stop loss, I'm just going to put this number right over here. And for TP, I'm going to set this number over here. Now, once you set all these things, you want to set the risk percentage. 1% of $100 is $1, which I set on my session before. Now, once you've done all that, you want to press on the place trade. All right, so once you place your trade, you have your stop loss, which you set, and then your TP. This is totally random. I did not do it by anything. So once you've set all your stop losses, press on continue. So unfortunately, my stop loss was hit by a very small amount. As you can see, I entered over here, had my stop loss just about over here, got stopped out, and my TP was over here. Yeah, this was very unlucky. This will happen in live markets as well. You just gotta have the discipline. So this is what happened over here. Now this will go automatically to your stats. Once you're done the backtesting for the day, the week, or in the month, you go to your stats. As you can see over here, this was the trade we took. I accidentally might have just placed 4 trades, but as you can see, this is the trade we took. Now, if you really want, you can also get the paid version, which gives you a lot of information over here. As you can see, this is all sample data. Now, if your backtesting looks very solid, then you can move it on to demo and trade it live and see how it performs in real time. So that's basically how you start finding a strategy that actually works for you, and it all starts with backtesting. Now, this part is really important, understanding your win rate and your risk to reward. There are basically two types of traders. You've got the traders who go for high win rate with a lower risk to reward setups like a 1-to-1 or a 1-to-2. And then you got the ones who have a lower win rate, but they aim for bigger risk to rewards. Both styles work. There is no right one. It really just depends on what suits you and your strategy best. Now, this cheat right here breaks it down super clearly. It's based on the idea that you're risking 1% per trade. So when it says a 1-to-2, it means you're risking 1% to make 2%. And if it says a 1-to-3, that means you're risking 1% to make 3%. So triple the amount you actually risked. If you look at this cheat, you'll even see with even a 40% win rate and you're going for 1-to-2 risk to rewards, you're even profitable. You don't need to win every single trade, and that's what makes this game powerful. So once you're backtested, looked at your stats, and let's say you have a 50% win rate with a 1-to-2 risk to reward, and according to this sheet, you're profitable. This is why backtesting and tracking your trades is so important. Just remember this. Backtesting results aren't the same as live market results. When you're backtesting, you don't have any emotions, there's no pressure, and you're just watching candles play out. But when you're live trading, it's completely different. Trust me, I know. You'll see candles moving in real time, there's hesitation, second guessing, fear of missing out, everything. So don't get too hyped just because your backtesting results were good. Use them as a baseline and then move to demo trading and then from live trading and so on. All right, now let's talk about how to actually risk 1% on your trades. For example, if you're trading with a 10K account, 1% of that is $100. That means you only want to risk $100 per trade. But how do you know how big your lot size should be? That's where this position sizer comes in. There are so many free position size calculators out there, but this is the one I'm using for this example right over here. They all do the same thing, but keep in mind, most of these calculators only support Forex pairs. So if you're trading something else like gold or indices, you'll need to check if the calculator actually supports that. But now, here's how it actually works. First, you want to enter your pair. So I'm going to go for Euro USD. You want to enter your account currency. Then you enter your account balance. So for this example, I'm going to go for 10K. And then your risk percentage. You can swap it with money or just risk. So for proper risk management, definitely I'm just going to put 1% here. It's always actually up to the trader if you want to risk 1%, 2%, 5%. But 1% is the most common risk percentage everyone uses. Next, you need your stop loss in pips. To find out, just go on your trading view charts. Say you're trying to take a buy. So take your long position and set it where the price is right now. Now you set your stop loss, let's say just at this liquidity right over here. And as you can see, your stop loss in pips is 22.4 pips. So now you go back to your position size calculator and then you enter 22.4 pips right over here. 0.4 pips, and then you press calculate, and then that shows exactly the amounts of lot size you'll be using on your trades. So now when you're placing a trade, you know exactly how much you're risking. There's no guessing, there's no going over, there's no going lower. You know exactly how much you're risking, and this you need to use if you're trying to trade with proper risk management. So that's why it's important to understand trading sessions. I'm on baby pips here and I want to go over the Forex market time zones. As you can see, we've got the Sydney, the Tokyo, the London and the New York sessions. These are the four main sessions. They all open and close at different times depending on your time zone. The market moves differently depending on which session you're trading on. Some are slower and some are more volatile. And the best time to trade, or when the market is very volatile, is around 3 p.m. until like 7 p.m. As you can see, it's pretty green over here. So that's mostly like early New York session. And also, I just want to talk about baby pips. It has a lot of other useful tools. Like, for example, you have so many tools over here, and it's basically like a best beginner thing you could possibly have in trading. Now, if you're ever going to forget the session times or want to see them directly on the chart, you can do them on TradingView. So just come to your TradingView charts, and then on the left top corner, you press on indicators, and you have so many indicators here, everything you need. But right now, I'm just going to go over the sessions. So you just search up FX, and it should come right here, FX market sessions. Just press that, and then it will show on your screens every session. So let me just go maybe on the 50-minute time frame. As you can see, the Tokyo session was this part over here. This was the Tokyo session. This here is the New York session. This will be just be way easier to know when or what time the session starts and closes. And the most volatile is, remember, like I said, the early New York session. So this is the most volatile time to trade. And volatile just means the best time to trade. Yeah, you have very much momentum in the markets, big candles, and then something like late in the night, this like not volatile. And then right, as you can see right here, you got big candles, that's very volatile, big movements. So the best time to trade is of course early New York session, but if you're a swing trader, like these sessions won't matter. For me, I hold trades overnight, so personally I do not use this at all because I hold trades overnight, and taking trades doesn't matter for me in what session or whatever. All right, now that you got the basics down, it's actually time to start demo trading. So open your phone and download the MetaTrader 5 app. It is the most popular platform for trading, and it's what most traders use. So I'm going to show you how you can set up your demo account and place your first trade. So what you want to do first is head over to settings, then go to trade accounts, then press the plus button and just go to demo account. Now here, just put your first name, your last name, everything like that. Press $10,000, leverage 1 to 100, press accept, and then make your account. Now just check if everything is correct and just press start. Now you have created your first account. Now what you want to do is go to the quotes and add the pair Euro USD. Press the plus green button, and now we're going to place the first trade. All right, so for your first trade, let's say you're trying to take a sell right here on Euro USD. So just set the price where it is right now, and now this is where the position size calculator comes in. So let's say you're trying to enter right here. Our stop loss is 11 pips. So head over to your position size calculator, select the currency pair Euro USD. We made a 10K account, so the account size is 10,000. Let's risk 1%, and stop loss is 11 pips. Now, here's what you need to do. Just press calculate. Now you go to your MetaTrader app. Just come on Euro USD, press on trade. Now let's go back on TradingView. Now, once we're back here, you set your stop loss. So double click on the position, and now here you are. Now go on your phone and then set your stop loss to this number right over here. So it's 1.3526, and your take profit, let's just have our take profit randomly at a 1 to 2. So that would be this number right over here as your TP. 95. And then once you're ready, put the amount of lots it said. So we would have to enter with 0.9 lots. You press 0.9 just over here, and now you press sell. Congratulations, I guess you just entered your first trade. All right, now you know everything you need to demo trade. So demo trade for at least 1 to 2 months. You don't need to rush into live trading. As people say often, trading is not a sprint, it's a marathon. You need to get comfortable how everything works in trading and learn how to manage your trades correctly before using real money. It's important to avoid making mistakes because that's going to cost you a lot of money, trust me, bro. So you got to ask yourself, are you profitable at 1 to 2 months trading? If you're not, then demo trade for another month or two and another month too, and until you're actually profitable and showing consistent profits. Then once you are profitable with demo trading, then you have to start considering live trading or using prop firms. But here's the thing, you don't even need a ton of money to get started with live trading. You could start with as little as just $10. However, you could also consider prop firms. Prop firms are companies that give you money to trade with, so you don't have to risk your own capital. So you pay like a fee, and then they give you a challenge. For example, they give you a challenge and you need to hit a specific percentage. Let's say like on phase 1, you need to hit like 10%, and you're not allowed to lose more than like 10%. So your drawdown is 10%, your profit target is 10%. And then your phase 2, you have a 5% profit target and then a 10% drawdown. And you also got some other rules, which you can go watch some other video about that. But yeah, they give you a capital to trade with, and then you keep a percentage of the profits. But they do have profit splits The most common is 80% profit splits, but you need to pass the challenge, and then they'll give you basically a live count, and then you need to follow their rules, otherwise you'll get banned, and then they'll give you a small cut. But it might sound too good to be true, but here's the catch. 90% of people actually fail these challenges. So if you actually pass the challenge, you're like top 10% of traders, which is actually already huge. And there are a lot of prop firms out there. If you want to check out prop firms, then I do recommend checking out propfirmmatch.com. You can check out everything right there and choose the perfect prop firm for you. Now, whether you're demo trading or you're live trading, you definitely need to always journal your trades. This is very important for your growth as a trader. You could use something as simple like Google Sheets or like Notion templates for free, or you could use something like TradeZilla if you want a more advanced tool that is a little bit overwhelming for beginners. Now, for live trading. For live trading, you're going to need a broker. Broker is basically the platform that connects you to the markets so you can place real trades with real money. Now, there are tons of brokers out there, but not all of them are good. Some are like straight up really, really bad. So you have to be very careful. So when you're picking a broker, make sure they got very good reviews, tight spreads, low commissions, and no hidden bullshit fees or anything like that. Some brokers may even charge you for something really random. So just do your research and be very careful in it. All right, for the next topic, I want to talk about strategy. If you don't already have a strat, then you really want to watch this next part of the video, because I'm about to show you one of the most insane strats I have ever traded with. I've never seen this kind of profitability with any other strat. But if you already do have a strategy, then feel free to just watch this part of the video. You might even pick something useful for your own strat. And I'm not going to go super in depth into this strat right now. This is a beginner course, so I'm just showing you the basics. But if you want to learn more advanced into my strat, then I got a lot of info on my YouTube and also my Discord. But right now, let's just get into the markets and I'm going to explain everything you need to know. Alright, so before I actually start talking about my strat, I really need you to understand the basics of the market. So there are 3 very important factors you need to know if you want to trade my strat or really any strat. So the first one is trends, breakout structure, and liquidity. If you don't have these down, it's going to be really tough. So I'm just going to start with the trend. Keep this in mind. You never want to trade against the trend. If you're trading with the trend, you're already giving yourself a huge advantage. You could be increasing your chances of success by just 40% just by being on the right side of the market. Now, how do you really identify the trend? The easy way to do it is just go on the 4-hour time frame, zoom in a little bit, and then use the path tool that I showed before and start marking out the highs and then the lows. So now I marked out all the highs and the lows, and as you can see, we've been consistently taking out the highs and not taking out any lows. And if we're not taking out any lows, that means we're clearly in an uptrend. But if you want a more easier way to identify the trend, you could also press over here on the top left corner and then choose the line chart. This will make it way easier to identify the trend. As you can see, we're taking out highs again, and then we're consistently taking out highs over here. It's up to you. This gives you a way simpler way to see the overall direction of the trend. Now, once you understand the trends, what I want to talk about is a breakout structure. This happens when price takes out the previous high. So let me go back to my 30-minute time frame, and as you can see, this here is called a breakout structure. It's the same thing as just taking out the highs. So this basically means if price takes out the previous high in an uptrend or a previous low in a downtrend, that tells you that the market is continuing in the direction of the trend. So if you're looking for entries, you'll definitely want to pay close attention to breakout structures, because it's when the market confirms that the trend is still in your direction. And if you have hard time identifying all the breakout structures, you can also search them up on the indicator tools. Just Google up BOC and you should find very simple ones just over here, and they will mark all the breakout structures in the market. Now, for the most important one I want to talk about is liquidity. Liquidity is all about where the market is grabbing money. A lot of money comes from stop losses. When the market drops and takes out a previous low, it's grabbing all of their stop losses and then reverses. That is called like a liquidity sweep, and that's what I mostly use for my strat. Once all that money is taken, the market often like reverses and moves in the other direction. So I'm going to find a quick example for you. All right, so as you can see over here, you have your direction just moving in an uptrend. And as you can see, once it took out this low, it took out a lot of stop losses that people were, let's say people were entering just over here. They were in buys and their stop loss was just below over here. Now, what the market does, it came down here, took their stop losses, had a swept, and now pushed really hard to the upside. But the way I trade is that I actually use these liquidities in advantage. And my strategies is all about advantage of those stop losses, using liquidity to power up my trades. Now that you understand the trend, breaker structure, and liquidity, I'm going to dive into my strategy now and how to use all these factors in the live markets. Alright, so my strat is all about supply and demand zones. So before I actually start making some zones, I want to identify the trend real quick. So I'm going to zoom out real quick, and as you can see, we're definitely bullish. We even took out this overall high, which makes us like just very bullish. And we also haven't taken out any lows. So we're clearly bullish. And that's what I want to see before I actually start looking for demand zones. So for this example, I'm going to show you a demand zone example. And before I even go into the actual chart example, I want to give you a simple visual idea of what I'm actually looking for. So what I'm looking for is I need a push down, clean with strong bearish candles. Then I want to see a strong push up, not just a little bounce, but a real move showing that buyers stepped in. That creates me my demand zone. Now, after demand zone is created, I need price to push back down and create a new low, and that low is going to be my liquidity. Then I want to see price taking out the high, so liquidity taking out its own high, and that's my breakout structure. Now, once that happens, I got everything I need. The demand zone, liquidity sitting below, and a breakout structure confirming the bullish trend. All I'm waiting for now is the price come directly to my demand zone and give an entry. So I'm going to explain this now on the actual live markets. So I'm on the replay mode over here. Now, as you can see, we had a push down and then a strong push up. Here's my demand zone. Now we need a push down, creating a low, which is going to be my liquidity, where all the stop losses are going to be set. All right, so my liquidity is just over here. This will be my liquidity. Now, after my liquidity was created, it took out the high. This is called a breaker structure. And as a bonus, it took out this overall high as well, which makes this like A+ setup for me already. Now, what I need is price to come directly to my demand zone, where the liquidity based, where my demand zone is based, and where all stop losses are based. So now once price came directly to my demand zone, I had a massive rejection from my zone. All right, now I'm going to talk about my actual entry. So I have three different entry models I use. I have the flip entry, the directional close, and the break of candle. But in this trade, I used a flip entry. Don't worry, I'm going to explain all three later. But for now, I'm going to talk about the flip entry. Now, when I look for a flip entry, I want price to come deep into my demand zone, starting bearish, going down. But during that same candle, it flipped all the way up here and went bullish. So as soon as it flipped bullish, I entered. So let me give you a quick drawing example. I have my demand zone. Then this is where the previous candle closed. This is a bearish candle. This bearish candle right over here. Now, the next candle opens where the previous candle closes. So this candle opened over here, and then it went deep into my demand zone, made a massive wick, but didn't went through it. If it went through my demand zone, it already invalidated the zone. So now, after it went this deep into my demand zone, it went all the way back up with so much momentum, showing so strong rejection from the candle, and then flipped bullish. And that's exactly where I entered. So I entered just as soon as it flipped bullish and had my stop loss just under this wick. All right. now I've shown the flip entry, but if you somehow missed the flip entry, there's another option you could have taken, which is the break of candle entry. So for this example, if you didn't take the flip entry, you could have entered with the break of candle right over here. Now, a break of candle means that it broke the previous bearish high. So as you can see in this example, this is the candle you would have entered, and I would have taken the flip entry, but if you somehow missed it, you would have entered just as soon as it broke this candle's high. You would have entered just over here. And for stop loss, I would have a 30 pips max stop loss. When you took the flip entry, you would have had your stop loss just below over here. Normally I have it 1 pip below the zone, but I don't want to have my stop loss under the zone like this, so I just kept it under the candle. But usually I do have my stop loss just 1 pip below it, so it gives it more room if price wants to come back down and react from the zone just again. But as you can see over here, this was not needed. So a break of candle, you would have entered just over here, and a max stop loss of 30 pips. So 30 pips just over here. Alright, so let's say you somehow missed both of these, flip entry and the break of candle. Then you could have also taken a directional close. Directional close is pretty simple. All you need is the first candle that reacts from your demand zone to close bullish. So for this example, you would have not entered on this candle. Though it reacted from the zone, you would have not entered because it closed bearish. Now, the next candle came really deep inside the zone. Could have entered a flip entry, you missed that. Could have entered a break of candle, you missed that. So you take a directional close. But this is actually the kind of entry we get most often. And if you're not an aggressive trader, you could definitely just stick with the directional closes. It's entirely optional. But I will say that taking flip entries or a break of candles could come so useful in some situations. So yeah, just directional close. As soon as this candle closes, you enter, and a max 30 pips stop loss. There you go. All right, now that you know all my entry models, I'm going to show you exactly how this trade played out and how I manage my take profit levels. So when it comes to setting my targets, a simple way to do this is just to target this high over here. But since I'm a more aggressive trader, I'm going to be targeting these highs just all the way back over here. I'm going to be targeting my TP1 as this high over here and a TP2 just over here. Now, the reason I take both TP1s and TP2s is because I don't want price to come really close to my TP. Let's say, for example, I was in this trade and then I didn't have this TP1. Price would come all the way over here. I didn't tap my TP and then fully reverse back down. So that's why it's crucial to have your TPs for proper risk management. So here's how I handle it. After my TP1 is hit, I close 50% of my profits and I move stop loss to break even. And then I leave the rest 50% running for my TP2. So for this example, let me just set up my flip entry again. Just stop loss below over here, a flip entry just over here, a TP1 over here, and a TP2 over here. This way I can maximize my gains while still managing risk effectively. So this is how the trade played out. So yeah, this very clean trade, how it played out. But now, what I said before, let's say the price came all the way over here. Let's say this is how it moved. Came all the way over here and fully just came down reversed. If I didn't have my TP, it would really mess up my psychology and my risk management. And as you can see, my TP levels were just perfect. I had my TP2 over here, and now price fully reversed and came all the way back down and started going bearish. Alright, so now I want to go over some back testing. I will go over some small period and I'll show you exactly on what I'm looking in a trade and exactly how I will enter in a trade. So this will be the most important part of this strategy part, and you will like master this strategy just by watching this small part. So I'm going to start back testing right now. Alright, so I'll be back testing March 2025, just the previous month we just had. I'll be back testing on Chef JPY. Now, just to make it clear, I know how every single trade played out, so I'm not going to act like I'm doing this for the first time. I already know which trades win and which ones loses, but I'm going to show you exactly how I took them live and what my thoughts were at the time and how I managed them. Also, for this backtest, I'll be only going over demand zones, so I'm not going to cover any supply zones in this one. Alright, so as you can see right over here, I have a zone which took out the high just over here, and my liquidity is over here. Now you're probably wondering why I marked out the zone by just the body and the lower wick. I don't want to go too in depth into this right now because it's a bit more advanced and not really beginner friendly. So I'll say all that for another video. But as you can see, this candle, my zone went above this candle. I mean, it might be confusing. Like I told you, I don't want to go too in depth. I just want to go over some other confluences in this trade. So I just mark it out from the body and then the lower wick of this. So right now, as you can see, if this directly comes to my zone, it will be very clean. As you can see, it took out all these highs, which makes this trend now bullish. So let me just mark up the zone like that and let's see what happens. All right, so we're approaching the zone very nicely. All right, so we first had a very nice reaction, but then unfortunately we closed inside the zone, and this will be a perfect example where I would ignore this trade just because it disrespected the zone. All right, let's just continue. All right, so we created a few demand zones, but I'm gonna mark up the lowest one just over here because it has the best liquidity. As you can see, this is my liquidity. This is the high it broke. This is very important that it breaks this high. Let's say if the price would do something like this, my demand zone created a high, created liquidity, but didn't take out this high and then came to my demand zone, I would not take this trade just because it didn't take out the high. So this is very important. So as you can see, it took out the high just over here, broke it over here, and also as a bonus, it took out this high also. So now all we need is directional move back to my demand zone. All right, so I got a perfect trade right over here. So actually what I do mean by, I always keep saying directional back to the zone. So I don't want it to make this kind of movement. My zone took up the high and then it starts giving me so much bearish momentum to the zone. So if it does something like this, I would definitely ignore the trade because then it gives me the bearish momentum and I don't want to take that trade. But here, it came directly to zone, did something over here, but it did still give me like the bullish vibes because as you can see, we are really bullish. We are taking out we took out all these highs, and we also failed to take out many lows, as you can see over here. And this is why I'll definitely be considering this trade. And over here, this will be a directional close. Could have been a flip entry as well. I mean, I did take a directional close just over here just because we didn't come too deep inside the zone. But for a stop loss, I would just have it, as you can see, 16.6 just below the candle, and now 1 pip below would be 17.6 pips. And now entry over here, and for profit targets, I would just be targeting this high for a 1-2. Let me cap it at a 1 to 12 risk to reward. And for a TP1, I'll just be targeting this high over here. All right, let's see how this plays out. Now, of course, after my TP1 was hit, I would definitely have my stop loss at break even. Let's say the price comes back down here after my TP1 was hit. It will close at break even. So I would just have my TP1 locked in and I won't lose any more money after that. But I'm pretty sure TP2 will be hit right now. All right, so it took a little bit while, but as you can see, TP2 was here. Now, we did actually have a demand zone over here as another accuracy zone, but I did decide to avoid this just because it was coming off a different supply zone. As you can see, I mean, I don't really like seeing something like this because when you're coming from a supply zone, you want to turn bearish. So I just avoided this trade, but TP2 was hit over here. So I secured a good amount of percentage. So let's just continue right now. All right, so we're approaching this zone over here. All right, unfortunately, this is invalid as well, just because it closed inside the zone and momentumly just crashed through the zone. So I'm just going to continue right now. I created a really nice demand zone with a very nice level of liquidity. As you can see, just over here, this is my liquidity, break of structure right over here. Also nice that it broke these highs coming into this clear space over here. All right, this is a very nice kind of trade coming directly to the zone. For this trade, I will just have another directional close. So as you can see, this bearish candle tapped the zone, this bearish candle tapped the zone, but I would not enter on any of those because I'm gonna enter on the first bullish candle to react from my demand zone. Over here, 1 pip stop loss, 17.4 to 18.4. And now for TP levels on this, I would just leave it at a 1 to 5. I mean, I would target this high over here, but I would just cap it at a 1 to 5 risk to reward. And I will leave TP1s just for this point, just because my take profit ain't that big. So I'm going to just see how this plays out. Yeah, as you can see, we had a retap to the zone. Now, as you can see, there was another demand zone here, which I did actually see, but I decided to avoid this trade as well, just because, like I said before, really early in this video, that I was talking about news. And as you can see, this would have been totally valid trade, but now news definitely ruined this trade. I would have entered for a flip entry on this trade, had my stop loss 1 pip below the candle, and then, I mean, you could have still entered over here, but you definitely would have wanted to close just before news. And as you can see, news totally had a momentum candle over here, stopped you out just before that, and then your TP was it. So buyers were still right, but definitely want to avoid these kind of trades. Definitely don't want to trade news unless you're some kind of gambler or anything like that. All right, so this would actually be a perfect example of I mean, I see some people taking these kind of trades, but keep this in mind that your zone is not allowed to be tapped. Let's say this was a zone, all right? This was a zone, it came like this, made this high, and then came to the zone. It would have been totally valid, but as you can see, the zone is already tapped. So investors were already in this kind of area. So you wouldn't want to look to take buys if it comes directly back to this demand zone. So I would avoid this kind of trade. All right, we created a few demand zones over here. This demand zone, very nice liquidity, and also this demand zone just below the big move up. All right, as you can see, we close inside the zone. It means disrespecting the zone, and this will now be invalid, but we still have this. There you go, tap the zone. Now as you can see, just a nice flip entry. Have your stop loss just 1 pip below the candle that tapped, 14.8, 15.8. Very simple. And now for TP levels over here, I'm just going to go at this kind of consolidation area, target this high. I'm going to cap it at a 1 to 14. And for TP1, I will just target this high over here. All right, so this was a very nice trade. All right, so we're approaching this another accuracy zone just about over here. Let's see if we get a oh, we had a very nice reaction. All right, this could actually be a very good example. Let's say if this candle reacted from your zone, you could also just wait and enter on the next candle, just because this candle didn't strongly close bullish. As you can see, it's a very small bullish candle. So you could have also just waited for the next candle, and then you could have just entered over here. I took this entry over here, so I'm just going to have my entry over there and stop loss 15.6. 16.6. Simple like that. And TP levels for this, just about on the high without a TP1. Oh, so TP was hit. Great. Let's just finish this month up real quick. All right, so we didn't have any other trades, but this month over here, absolutely insane. If you think about it, you got 6.6%, 14%, 5%, and then another 12% on top. I mean, you obviously won't get these kind of months every single month. So don't get too hyped of this video just because I showed you like these insane trades. Yeah, so I don't get these kind of months every single month. Don't be expecting like 40% months every single time. Like I said, this pair, Chef JPY, out of all months I've been trading with this pair, this month was the best. All right, so now I just want to go over a actual live trade. So I'm on the 5-minute charts just over here. We have a supply zone which is about to be tapped soon. So I'm just going to give you a quick breakdown on this trade. Simple, nice level of liquidity. Then a break of structure, happened twice, shows more bearish momentum, coming directly nicely to the zone. Overall, we're kind of moving bearish, but on the 5-minute time frame or other lower time frames, the trend doesn't really matter. So what you want to do is just open your MetaTrader on your phone. Now just go to your Euro USD chart, and here you're going to put all the information in, your stop loss and your take profit and your lot size. Before we do that, we of course have to check Forex Factory just because we don't want to trade news. So I'm going to go on Forex Factory right now. All right, so the time right now is 2:43 and there ain't going to be any news until 3:15 p.m. So we're going to be okay taking a 5-minute trade for now. But if our trade is going to go over the 3:15 p.m. time, then I want to close before news just to lock in some profits and don't get stopped out for no reason. All right, now let's just wait until it. Okay, well, it's tapped. And now all we need is an entry. So I'm just going to wait for that. We can look for a break of candle, flip entry, or a directional close. So on the 5-minute, we have different rules to the 30-minute. So I'm just going to have my stop loss just at the wick that tapped on the zone. Not one pip above, but just on the wick. So that's how we do it on the 5-minute. But now I just wait for an entry. So I don't usually trade the 5-minute time frame. My main time frame is still the 30-minute. But yeah, now we're 40 seconds into the candle and we have about 30 seconds left. Let's see if we actually close inside the zone or have a reaction. All right, so it's looking like we're having a nice rejection. It did not close inside the zone. All right, so we had a nice rejection, and now just double click on your position tool, and for your stop loss, just copy this number, 1.13802. And now for your take profit, just for the sake of this video, I'm going to go for 1 to 2. But for your take profit, just copy this number, 1.1370. So that's your stop loss and your profit levels. Okay, now the information is set, but of course I have to wait for an entry first. These numbers are going to change. So now what you want to do is head over to a position size calculator on your phone or you're on your PC, doesn't really matter. Then you're going to want to set Euro USD as your pair, account currency USD, and then an account size. I have 10K, so I'm going to put that. Risk ratio, so percentage, I'm going to risk 1%, so that's $100 of a 10K account. And now stop loss in pips. So I'm going to go my trading view and I'm going to set my entry just at the break of candle. If we get a break of candle entry, then I already have my stop loss in pips. So that's 4.6, but I'm just going to put 5. So as you can see, I'm going to have to use 2 lots for my trade if I want to risk 1% on a 10K account. So now, since my stop loss has increased, I'm going to have to put my new information in. So just double click on the position again and just change the take profit level. Okay, so we just got a break of candle, so I'm going to have to put the information in quickly. All right, now everything is set. Just press sell, and now you have entered the market. Okay, so the break of candle didn't actually come in advantage, but you could have also just taken a directional close. But I'm gonna be honest, break of candles might make a really big difference sometimes. But here's an example on why some people decide not to take break of candles because it might be too risky sometimes. But as an aggressive trader, I can say that it's definitely useful in some situations. But here it didn't really come this useful. Now, if you're probably wondering why are we in minus when on TradingView we are still in the profit, that's just because of spreads. I'm on a demo account and the spreads here are really shit. So don't worry about that. It's just how trading is. When you enter trade, it's gonna open like in minus, not in like 0, and that's just because of spreads. So just don't worry, it's not glitch or anything like that. Okay, so far so good. We're coming down with a lot of bearish momentum. All right, now let's just go break even. So just memorize this number, last 3 numbers, then press on Euro USD, press modify position, and then put the last 3 numbers into your stop loss. So when it comes back to our break even point, we won't be charged anything. That's where we entered. So it will just take us out for $0. So it's okay. good risk management. All right, so we have that 3:15 p.m. news next candle. So we want to realistically close before that. But just for you guys, I'm just going to keep the trade running. I'm going to show you how news is going to affect the market. It might do literally nothing and it might have something really major. So just let's see. All right, so news is going to drop in 3, 2, 1. And yep, as you just saw, I was taken out of a break even right when news released. This is exactly why you should avoid trading high impact news, mostly red folders. Ideally, you should probably just close 5 minutes before the news hits. There's a reason prop firms have this as a rule because it's about protecting your account. So yeah, just keep this in mind when you're trading around news. Okay, so I'm back on a risk and reward win rate sheet here. Now, unfortunately, the trade did lose due to news. And of course, you don't want to be trading news. There's a reason why prop firms have it as a rule to protect your account. Now, if there wasn't any news, this trade would have probably win, seeing the bearish momentum it had to the downside. But now let's say it did win, all right? And we have a 1 to 2 risk reward on that trade. And let's say, of course, we have a 60% win rate. Now, you would be profitable. Of course, even with a 40% win rate, you'll be profitable. But now let's say you have a 60% win rate, a 1 to 2 risk to reward. Now I want to show you exactly how much profit you could be bringing in. Now, I'm on the whiteboard here, and let's say you have a 100K funded account. You're traded demo for 3 months. You bought a small account, like a 10K funded account. You passed it, you got a payout, and now you're ready to go on a big account, like a 100K account. That's roughly about $350 depending on what prop firm you're using. All right, 100K funded account. And now let's say you take 10 trades per month. You have a 1 to 2 minimum and maximum risk to reward per trade. And then you have a 60% win rate. All right, with these stats, you could be bringing in 8% per month. Now that's $8,000 on a 100K account. With a 20% profit split the prop firm takes, that's around 7,000 something. Now that's actually very, very good. All right. Now let me go on the Forex compounding calculator. Let me put 100K here, 8%. And let's say you be consistently making 8% per month for 6 months. Now, of course, it's not realistic. Sometimes, even as a profitable trader, you're not going to get really good 8% months. All right. Sometimes you might get more. Sometimes you might even be in negative. It always depends on the market conditions. Like right now with the Trump situation, a lot of people are just literally just getting negative months, but they're going to make the money back in no time. But yeah, you could be making $60,000, bro. 6 months of trading with 8% per month. That's realistic if you're a profitable trader. Now, you're actually proving yourself by watching this video so far that you're actually really focused in trading. All right. Remember, $60,000, 8% per month for 6 months. Now, of course, you won't reach this in your first year of trading. Obviously, you need to be demo trading, practicing, practice, bro. I also want to go over a quick trading plan I made. Of course, you don't have to actually use it, but when I first started out, I wish someone made something like this, like a trading plan I could follow. So I'm just going to make a quick trading plan, and this will be the last topic of the video. Okay, so here is my trading plan. All right, I made a quick trading plan. You don't obviously have to use it, but yeah, of course, when I started out, I wish I had something like this. All right, first of all, find a strategy. All right, if you're using my strategy, I've got tons of videos on my YouTube, not that much, but on my Discord, I can help you out privately. You can just DM me and some other people there. You can ask them questions. All right, then once you have your strategy, if mine doesn't work for you, you can find some other YouTube videos about your strategy, whatever you find. All right, learn it and then test it. All right, backtest it using free tools like Trader Casa, FX Replay, or Go Charting, or something like paid version like TradingView. All right, once you've tested it, you backtested it, you found good results with your strategy. Once you found that strategy, demo trade for at least 3 months. All right. Within those 3 months, get at least 4% total profit. All right. If you weren't profitable in those 3 months of trading and your strategy literally does not work on live, you can just find a new strategy. But strategy hopping like that is definitely not good. Only the beginning. If you're actually looking for a strategy, you can see if you actually like it, if it fits your lifestyle. But if you still were unprofitable on those 3 months, but you see potential in your strategy, it works in backtesting, you were just unlucky, bad market conditions, you can just trade for another few months until you make 4% in those whatever months. All right. Now you made 4% in demo trading. Buy a small funded account like 5K, 10K, 25K. Depending on your budget, just buy an account. All right. I made a formula for this as well, like a risk management formula you can follow. Okay. So the risk management formula is like this: maximum drawdown divided by 2 divided by the number of trades you take per week. Okay. So typical maximum drawdowns are like 10%. So this means like if you reach this minus 10%, then you're going to lose the account. All right. You divide that by 2, that equals 5. Now let's say you take 5 trades per week. You divide that by 5, that equals 1. So that means how much percent you're going to risk per trade. You're going to risk 1% per trade. Now let's say you take 3 trades per week. Okay. 5 divided by 3, that equals 1.6%, I believe. Okay. So this means that you're going to have to lose every single trade for 2 weeks straight to lose your funded account. And if you're a profitable trader, that's not going to happen. Now, let's say you actually did lose all those trades 2 weeks straight and you failed to pass your funded account. All right. Then you can just go back to demo trading. But if you actually just lost your account by a stupid rule you didn't know, maybe trading news, and you feel that you can just buy another funded account and this time you won't make that stupid mistake, then you can just buy a funded account if you're confident, or you can just go back to demo trading and trade until you're confident on buying another funded account. All right, now let's say you pass the funded account. All right, with that account you get a payout. Okay, with that payout you don't go buying cars or any fancy things. Okay, you put that back into trading and buy a bigger account. Okay, so you're gonna scale up. You're gonna buy like a 50K account. But now let's say you failed that 50K account. Okay, you failed the 50K account. Then you also have that smaller account you bought before, whatever account you bought. All right, you can get another payout and buy another 50K account. And if you fail again with the 50K account, and you're probably wondering, why did I first pass my funded account and now I'm failing? Now, that might be because of psychology. You're probably thinking, I'm on a bigger account now, so I have to be more safer. I'm going to have to, trade differently. But if you want to actually trade big money, you have to just treat it like you treated the other accounts that you passed with. Okay. So if you buy a 5K small account, you probably don't think too much about it. You passed it. Then you buy a 100K account. You go, oh my God, that's so big account. I'm going to have to be so safe. But if you actually pass the account with the 5K, just trade it the same way. You're going to trade the 100K account and then you're going to pass it. And with the 100K account, like I said before, 1 to 2, 60% win rate, taking 10 trades per week, following the risk formula I made, you could make a lot of money, bro. Like with this trading plan I made quickly, you don't have to obviously use it. This is just something I wish someone showed me in the beginning, because I was so confused on where to start, what to do. So this is what you could use. Possibly you can get your own thing, whatever. And of course you have to set your own rules. So let's say you're trading the 5-minute time frame, okay? And you find a lot of setups daily. So you would want to set like a maximum trade you take per day. So let's say on a 5-minute time frame, you'd want to take maximum 3 trades per day. Otherwise, you're going to be over trading, and some other rules. Okay. And if you set those rules, you of course have to strictly follow them, because that kind of discipline is exactly what separates real traders from the ones who burn out early. If you actually sat through this whole video, bro, then you're taking trading seriously. All right. And that already puts you in a better position than most traders. Most traders never take the time to learn. They just jump in, blow their accounts and give up. But you're not that. If you're serious, and I mean really serious, then you gotta treat trading like a real career. There's no skipping steps, all right? There's no chasing real quick results, no shortcuts. You need to be disciplined, all right? You need to be focused and committed. Every trade, every mistake, every win. It's all just part of the process, all right? It's not easy. you're going to be stressed, you're going to feel pressure, you're going to get frustrated. But if you push through those bad moments, bro, you will grow and your results will grow too. All right, so from here on, it's on you. All right, you got the knowledge, I've taught you, you've got the plan. Now it's about how hard you actually want it, not just today, but every single day. Because in trading, consistency wins. Okay. And also, I'll be replying to everyone's comments, so just drop them below. And I genuinely wish you the best of luck in trading. Stay focused, stay patient,